Good morning, bulls and bears, and welcome back to today's market update. Today, we'll take a quick look at what's moving the markets, including the US dollar index, crude oil, gold, and the Australian dollar against the US dollar. The US dollar index has rebounded toward the 97 level after three straight days of declines, supported by stronger than expected US jobs data. January's NFP increased by 130,000, making the strongest gain in over a year, and the unemployment rate unexpectedly fell to 4.3%. This suggests the US labor market remains resilient, which has reduced expectations for near term Federal Reserve rate cuts. Markets are now pricing the next Fed rate cut around July instead of June, and the probability of a March cut has dropped to very low levels. From a technical perspective, the dollar is hovering around the Bollinger Band midline near 97.26, with volatility tightening, a sign that a breakout may be approaching. Support sits at 96.39, followed by 96. Resistance is around 97 to 97.03, then 97.47. A bullish shift could emerge if a MACD momentum strengthens near the zero line. Crude oil is trading around $64.8 per barrel, recovering from earlier losses as geopolitical tensions between the US and Iran continue to support prices. There are growing concerns that disruptions to Iranian oil supplies could occur if negotiations deteriorate, which has added a risk premium to oil markets. That said, upside momentum is being capped by rising US oil inventories, with reports showing a large stockpile increase of over 13 million barrels, potentially the biggest build in more than a year. Technically, oil is holding above the key support zone near $63.36, which keeps the broader uptrend intact. A break below 63 to $62.93 would signal weakening momentum. Holding current levels keeps the bullish structure alive. A break above $65.65 could open the door toward $66.24. The RSI suggests this recent pullback is more of a healthy correction than a trend reversal. Spot gold is currently trading near $5,070 per ounce, easing slightly as traders take profits ahead of key US employment and inflation data. Despite the short term pause, gold remains well supported by a weaker US dollar, geopolitical uncertainty, and expectations of Fed rate cuts later this year. Lower interest rates continue to increase gold's appeal since it doesn't pay interest. From a technical standpoint, gold remains in a strong medium to long term uptrend, consolidating within a broad range between $4,402 and $5,091. A break above 5,091 could trigger a fresh rally toward $5,182. A drop below $4,747 could signal the start of a deeper correction. For now, this sideways movement looks like a healthy consolidation rather than a trend weakness. The Australian dollar is trading around 0.71, rebounding after recent losses and maintaining a strong broader uptrend. The pair continues to trade well above its 50-day and 100-day moving averages, and recently reached a 3-year high, confirming bullish momentum. Resistance sits near 0.7138, followed by 0.7157 and 0.72. Support lies at 0.7022, then 0.70, and finally 0.698. As long as price holds above 0.70, the bullish structure remains intact. That's your morning market update. Thanks for watching. Trade smart, manage risk, and I'll see you in the next one.